The following is a presentation of TFNN. The Trader's Edge with Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
TFNN, welcome to the August 6th magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in at 877-927-6648. If you can't dial in, let your fingers do the walking. You can always send me an email, steve@tfnn.com. Please, inside that subject heading, just put radio show question. And, of course, inside the Tigers Den. Well, any ping will do. So let's go ahead and get this show started on magical, magnificent, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trading up 75 points, 25,537 is the print. S&P is up 12.5 points, 2852. NASDAQ 100 up 41 points. Russell up 10 points at 0.6% to the upside. Semis are up 5. The trannies are up 56 points out there. Spot volatility X trading out 1127, well below its 50-day exponential moving average. Gold's back $5. Silver down 10 cents. Light sweet crude up $1.08. Trading at 69.57. Leading the charge to the upside dollar-wise. It's Booking Holdings $56, nearly 3%. Amazon's up 20. That's a little over 1%. Chipotle up 15%. I'm sorry, $15. That would be 3%. It is Intercept Pharmaceuticals. It's up 15%. That is $14 and change. Arista Networks up 11. FactSet Research up 9. To the downside, it is Medfast. That was a big mover and shaker on Friday, gapping up with a big volume behind that move is my recollection. Pulling back today, down $9.54 or $4.47. Madrigal Pharmaceuticals off 7. China Biologic down 7. Praxair off 6. Lockheed Martin down 5. So certainly there are things to look at, but I want to look at what you want to look at. The first request coming from the Tigers Den, and that is if we could go take a look at a relatively new IPO. The ticker symbol on this is AVLR. Avalara is the name of the company, and I'm sure I probably butchered that. So because it's an IPO from last month out here, you can see here's the, well, yeah, I don't know if you can see it or not. Now you can, because we just expanded the chart. So it looks like it came public on June the 15th. So no real data out here. When I say no real data, with regard to TAS market profiles, things of that sort, wave counts in A to B equals CD patterns, nothing here on the daily time frame. Here's what we know. Price pulled back into the breakout day, not all the way to the bottom, which, by the way, would have been $35 even Steven. Instead, on Friday, price got down to a low of 36.16. As it was doing that, it was forming one of those beautiful hammer candles. Now, a hammer candle, bullish reversal signal. The real meaning behind it is that the market is trying to hammer out a low. So you come back to where, in essence, this stock broke out. You do it with a bullish hammer candle. Today, you've got a bullish engulfing candle. So you've got double G confirmation of where the buyers are inside this equity. And you can say they're between 36.16 and where you're trading right now at the $41 level. So how does it look? It looks to me like on Friday, and now being confirmed today, that this has formed a bottom, just heading up to its prior swing point, which has volume of 324,000 shares today, or 256. So you're also moving higher with volume out there and that is on ticker symbol AVLR. Let's go take a look at the general markets, and we'll check the phone, see if there's any emails that have come in. We take a look at the daily equity futures contract, that being the ES, panel number 1 on the left, NQ next to it, Dow, YM, and then the final panel is the Russell 2000. On a daily basis, everything is above resistance. Now, resistance here being our TAS market profiles. In the case of the ES Mini, it's above a prior swing point. What does the ES Mini want to do? It wants to continue moving higher, likely back to its all-time highs, or that's what the S&P 500 would be doing. If we take a look at what the NASDAQ is doing, as tough as a week as it had last week, I believe that price, no, I know, I don't just believe it. I know price just simply came back to support, which was the original. This is the market profile that was out there last week, which was in the 71.57 level. Price only got down to 71.67. You're now above a bearish structured profile that took place last Wednesday or Thursday. Wednesday it was. Price closed above that on Friday. Price closed above it actually on Thursday, then on Friday. And so this wants to get back to its highs out here. Its highs, by the way, being 75.30. Dow equity futures contract, they want to get back to their most recent highs from July 27th. That is 25.57. In the case of the Russell 2000, looks like she wants to head towards the top of its daily profile, 17.05. That's where the markets are headed to. They are headed higher. Pure and simple across the board. It's very easy. All we have are bullish signals out here. In fact, our New York Stock Exchange, which has been the, we'll call it the weak link out here, because its advanced decline oscillator reading has been below zero ever since the trading session of, drumroll Johnny please, that would be the trading session of July 16th, with one exception, and that was for just a wee bit of time on July 19th. And in essence, will perhaps be similar today. That's if we get a close above zero. Close below zero. This is taking the difference between the 19 and the 39-day, in this case here, because we're looking at a daily chart, advanced decline data, and it is creating an oscillator. When that oscillator is above zero, it says that the buyers are the ones in control. You always like to have confirmation the very next day, but this had been below zero. It's now above zero, and therefore the market breadth for the overall market looks pretty darn healthy. Just out of curiosity, where is the advanced decline line itself? Let's go ahead and put this up on our screen here, and we are at a new all-time high in it. So yes, it does look like prices want to continue higher, not lower. Spot volatility index well below that 50-day exponential moving average. That's 1352 as we speak, and it's trading at 1127. So in essence, all the signals, all the liquidity gauges, well, let's just see. High-grade bonds, what is that, the HYG out here? Let's see what that is doing. That, too, is moving higher. So if you're trying to gauge liquidity, which we always should be gauging liquidity. When there's money that are pouring into the high-yield bonds, tells you there is plenty of liquidity. It is trading higher today as well. So you've got that higher, spot volatility index lower, prices breaking above resistance, that being your TAS market profiles. They're trading above Stevie's red line, which is green, with envy. And that also means that that price oscillator is above zero. So everything, as we speak right now at 1:14 in the afternoon, says just simply one thing only. Do not be short this market. No signals anywhere in sight. Save your shekels. Consider the other side of the trade. We'll be right back. My dad, may he rest in peace, always had great advice, such as, if you want more, you have to become more. It's been a guiding light that has driven me to always be the best that I can be. When it came to trading and investing, I wanted more, and so I developed a set of disciplined tools that led me to become the #1 market timer for the S&P 500, according to Timer Digest. Dad went on to say, if you want more, you have to give more, which is why I took those same disciplined tools and created a black box that could look at any instrument for any time frame and tell subscribers and I whether it was bullish, bearish, where support or resistance was, and whether an instrument was forming a top or a bottom. The scans from my black box are now a part of the Mastering Probability service, which allows me to give more to subscribers. This coming Tuesday, August 7th, from 5 to 6 p.m., I'm holding an open house at TFNN.com, and I'd like to invite you to see the power of my black box. When it comes to trading and investing, I know I can help you become more too. Just go to the homepage of TFNN.com to sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's go take a look at some stocks that are moving and grooving in the marketplace. I don't have any other requests out here, either by email or inside the Tiger's Den. So let's go take a look at some of these stocks. Let's look at leading the charts to the downside. So Medifast, which had a big day to the upside on Friday. We can see this thing here. This thing had gapped up with now this is actually this here. When we take a look at this chart, this is an example of a three-gap play. And the reason that we can say that, I wasn't well, it was Friday morning. That's right, I did Friday's show between 8 and 9. So I wouldn't have seen this at 1 o'clock. But so there's a pattern out there, kind of where a market can get exhausted. Doesn't have to, but you certainly look for it. Three-gap play. David White is kind of our resident expert on that. I think maybe Polar Bear, that was a pattern that was shared with you by Tim Ord. I don't know if Tim is the one that created it, but here's the deal, folks. What you look for here, because you can see clearly three gaps. Now, the first gap, nice volume behind that move on March the 7th. You can see that this thing went from the close the prior day at 67.51, opened up at, or the low was 79.04. So you can figure out what that percentage in dollar move is. And it has another gap, perhaps this one on earnings as well, on May the 4th, 614,000 shares. Well, that session was 113.63. The high of the prior one was 99.72. And the key about a third gap, an exhaustion gap out here, is the third and final gap has to be the largest of the three in percentage and dollars. And it looks to me like that is the case. Now, I haven't tested the percentage piece of it, but you could do that at home. So we're seeing this pull back at this stage. Now, it's pulling back with light volume, albeit. And maybe all that's going to occur out here is a pullback to its breakout area, which would have been on Thursday of last week. So that would be somewhere between 169 and 177. Let me see here on my other charts. I had to restart my system, so I've only got one chart out here. Well, so that's an interesting it's an interesting pattern out here. If we take a look at the Rhodes momentum indicator signal, we can see how price had been stretching and doing less relative energy. That's my system drawing those black diagonal lines out here. And that is the signature of a instrument, in this case here, that has a potential topping signal. Now, what occurred on Friday was a shooting star. So shooting star, we just took a look at an instrument, AVLR, I believe it was, and we took a look at an instrument and we were able to see that on Friday, yeah, it was on Friday, where it formed a hammer candle. Market says it wants to try to hammer out a bottom. That's a bullish candle. The opposite, the cousin of it, is called the shooting star. Now, I've learned, my experience is, you go back and you take a look at shooting stars, they either work or they don't. Actually, a more powerful candle than a hammer from the standpoint that really they either, for the most part, yeah, no, somebody's going to send me an email and say it doesn't always work that way. And I'll tell you right now, you're exactly right. But for the most part, it typically does work. And what I mean by that is when you see follow through on the next trading session, and quite frankly, all bullish or bearish reversal candles, especially as they complete a pattern out here, you like to see follow through. Even inside the New York Stock Advanced Decline Oscillator, even if it closes above zero today, which right now it's trading at 122, the question is, can it hold that zero level come tomorrow? Because if it can't, the message is, well, the bulls never really had control. It was always the sellers out there. I know that's hard to say. Even when I just said when we went to break, don't be short. Well, I got to give you the signals as they are present right here and now. Now, in the case of Medfast, this says that price wants to pull back at least to Stevie's green line, 187.15. But I'd say if it's going to do that kind of work, it should pull back into the 172.87 level. That was the daily time frame chart. Out of curiosity, what's the weekly chart showing us? The weekly chart showing us that it kind of ran out of gas, but not a topping signal just yet. And on a monthly basis, just out of curiosity, where are we at on a monthly system? Monthly system looks still pretty good for Medifast. As long as it continues to stay above 187.15, that would be for the month of August. Let's go see what else is moving out here in the markets. You've got to the downside, Madrigal Pharmaceuticals. Let's just take a quick peek on this, see what this is doing, if we can figure anything. So here you had a huge sign of strength. This was on the trading day of May 31st. Again, if you're following us at home, it's MDGL is the ticker symbol. Of course, you know when I say that, I'm actually typing it in, so it goes to my other chart out there, just trying to be smooth as silk. Where did that come from, by the way, the old smooth as silk? Maybe I'm the only one that that says that. Maybe nobody else says smooth as silk. MDGL. I want to just take a look at its TAS market profile. So it's below the daily. It's below the daily. Just below the daily. So Magical Pharmaceuticals is coming up to a real key level of support this week, which is the bottom of its weekly profile. That level is 238.39. The actual low so far today or this week, 240.19. The question is, will it find support here? And at this day, we don't know. I just kind of looking around, surfing to see, can I find anything else? I don't see it just yet, but let's put this chart up here on the screen. This is Stevie's Ninja Trader software. It contains many of the tools that you and I use to be able to call the market. So when something makes a bottom, it uses typically either a time to mark setup 9 count, maybe a 13, a sequential or a combo count. 9 took place a couple of days ago inside Madrigal. Comes down to market profiles. Okay. Check 1 in the case of the weekly time frame. Price forms that Rhodes momentum top or bottom. We just took a look at that in the Medfast equity out there. We do not have that present in Madrigal Pharmaceuticals. And the other thing that we like to take a look at is the singing in Stevie Wonder's Key of G. And that is letter number G. Yeah, I figured that. Or number 7 when you take a look at my charts out here. And today happens to be, it is singing in the key of G. Very interesting. Now, tomorrow could make a lower low, so that singing in the key of G just could be a harmony that extends for a few bars out here. But it looks like Magical Pharmaceuticals is going to find support or a bottom around this 238.39 level. If it closes below that, well, then it has a long way to go before support would likely come into play. That would be $107. It's at 238.39. At this stage of the game, I don't think so. It doesn't look like it. You got that seventh wave move out here, but wait till tomorrow. Or wait till you see the actual buyers come in. They'll show you themselves. They'll reveal themselves to you. You'll see some type of bullish reversal candle, just as we took a look at in a couple of those issues earlier. What else is moving and grooving? Let's go take a look at some upside action out here. Let's take a look at the Chipotle. CMG is the ticker symbol. This is moving higher today, moving into a prior swing point. Volume today, 749,000 shares thus far, going into 2.1 million shares. So it does look to me, that what Chipotle is going to do, it's going to stall as it gets up to that previous high of 483.29. If we were to take that out, it would form at least a small A to B equals CD to the upside. Does look like Chipotle is going to hit it. Let's go take a look at our 3 time frame charts out here. CMG is the ticker symbol. See, interesting, above the weekly, above the monthly, above the daily. Just doesn't have that volume today. That makes kind of a lot of sense. It is the holidays. I think they're starting to go back to school in Florida, of all things. August the 6th. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the question coming out of the Tiger's Den out here, that's where it's active today. Everybody else seems to be snoozing out here. Oh, Robert sent a email. Thank you, Robert. Says thanks for all you do with 2 thumbs up. I like that. If we take a look at the question is the Wilshire 5000 is trading with inside its all-time swing point high. That back from January the 26th out here. And the question specifically is any info telling you rejection of the top is likely or a breakout and the rally is going to extend. So let's do it. Let's look at this a couple of different ways. First, this is a daily time frame chart, so you can see exactly what John inside the Tiger's Den is taking a look at as well. I just want to clean this up just a tad, get rid of. There we go. So we've got a nice clear space. So first things first, and what I mean by first things first, price is trading inside, has not yet tested the high of the swing point, which was January 26th. It's a yellow line going across my screen. The number is 29,760.59. Price closed basically inside that level. It did that. It has done that before, by the way. It did that on January 25th. When it closed above that with a nice wide-ranging bar, the assumption would have been that price was going to go test the highs out there. It didn't. So it shows you there are flaws inside of technical analysis. However, what you also see on my chart, in essence, are 2 red lines. Let's discount the first one. The first one was, in essence, showing you where the gap to the downside was that took place on January 30th. So that is basically a gap, also known as a falling window. Price was able to get up and close above 29,533. That's what it did on July 25th. If that falling window or that gap to the downside was really going to be resistance, you would not have seen price close above that level. And it closed above it for a second day. That was on July 26th. So in essence, the guys and gals that you called out to repair your window, resistance, in fact, repaired it. So we go ahead and we get rid of that. So now we just look and see, are there any other signatures of where sellers are at, bears are at. And then we have this big old bearish engulfing candle on the trading day of July 27th. And that just simply engulfed the body of the prior session at 29,649.04. Again, I don't know where price is going to close at the end of today. And so this is going to be an end of the day reading. But if price closes above 29,649 and still doesn't get the 29,760, it does suggest that price is going to do just that. Get to the 29,760 level. Having then made a 100% move of a move. Remember, that's going down from 29,760 to the low of February 9th down at 26,923. Now, the Wilshire 5000, in essence, is truly the broad measure of the markets out here. So much better than the New York Stock Exchange. New York Stock Exchange is filled with a number of instruments out there that can confuse it. Closed-end bond funds. I don't believe there are closed-end bond funds inside the Wilshire 5000. Would somebody out there be able to confirm that for me? But I think that this is a cleaner index versus the New York Stock Exchange. Most people don't even know that there's a bunch of, and when I say a bunch, I'm not talking 5 or 10. I'm talking about hundreds of closed-end bond funds with inside the New York Stock Exchange. Has everything. Has closed-end bond funds too in there. And so if that's the case, then I misspoke. But maybe just no, does not have closed-end bond funds. Okay, good. That's kind of like when you look at the stock chart and you look at what one of the differences between the New York Stock Exchange and this. I'm like, yeah, it looks to me like this is more pure. So it doesn't. So a close above 29,649. All it says to us is that price should then close above resistance. Old resistance, in a certain extent, should become new support because there is really no resistance at the top of this candle session at 29,760, other than just simply getting all the way back to the top, which can be an exhaustive area. I'm not looking at 29,760 as being some type of bearish reversal signal or anything. That really took place on the trading session of January 30th. And you and I have already determined that that window got repaired, so that was no longer resistance. And now we're just trading into this bearish engulfing candle. And if price is able to close above 29,640, I won't say it one more time, but it said that one more time. Then it says 29,760. And if you close above 29,760, it says you're going higher. Higher to where? You know, that's a great question. Now, the other thing, if we take a look at the monthly chart here for the Wilshire 5000. And if we take a look at Stevie's green line, green and red line, by the way, this line is used inside the intelligence behind my Bob system, bullish or bearish indicator system out there, that I'm doing a free workshop. It's an open house. That means anyone can attend, anyone. You want to attend. If you're not a technical analysis person and you're just looking to understand what any market is doing and you're managing your retirement funds, you want to be at this workshop. Even if you can't be there tomorrow live, go sign up for it. It'll be on your members page. If you're not a member, become a member. It's not that big of a deal. All you're providing is your name. It doesn't even have to be your real name, but you should put your real name in there. You know, what goes around comes around. And an email address. That's it. And I'll be able to explain to you exactly how Bob works, Stevie's black box system. But let's take a look at the Russell 2000, the Wilshire 5000 out here. And what we can say as a very generic term, as a very real term, as a way to be able to understand what the message of the markets are, the emotion of the markets is when prices trading above Stevie's green or red line, prices are typically going higher. A red line says you've got more counter trend rally. A green line says you've got more rally, no counter trend, period. And you can see that last month, the month of July, was the first time the Wilshire had closed back above this level since we started to see the declines back in January, February of last year. Up until, or this year, I should say, up until that point in time, the green line, even though rising, has been a resistance zone. So what this says, actually, to you and me, is that the consolidation is over. If we're going to use the Wilshire 5000 to make a determination of whether or not this, the consolidation, by the way, folks, is basically this rectangle. We'll go ahead and draw it in. Here in essence is your consolidation pattern. Price hasn't closed above it. It has not. But if it does, and you're trying to figure out where's the Wilshire 5000 going, well, it becomes pretty easy. You can just simply go ahead and say, as long as price stays above that consolidating area, then what you have is a measured move. A measured move means it's equal to or greater than the consolidation. This holds true for the Dow. And if we take a look at what that level is, well, let me get my cursor out here. It's right around the price point of about 33,046. You're trading at 29,680 right now. So staying above this, and take a look at the last consolidation that we had out here, just to use as kind of an example. Here's the last consolidation, and this was in the 2015 time frame out here, and in essence that was your consolidation. Price in essence broke above this level. It did slightly back in July of 16, I take that back. Just kind of hovered on that level in August and September. October, a little bit of a pullback, kind of normal just because of the seasonality. And then come November, from a monthly basis, price closes over that level and back off to the races. By the way, a consolidation is equal to or greater than. Last time the Wilshire 5000 consolidated in 2015 turned out to be a greater than move. Maybe this time too. Steve Rhodes with TFNN. Hope you're ready.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. You know, it's really all about currencies, right? It's all about understanding what traders around the globe are seeing on their screen, what's something that they are investing in, what it's doing in their currency. If they're making money in their currency, they could give a rat's patootie about what's going on in somebody else's investment in their same instrument in their currency. Now, I say hogwash to that because any trader wants to see everything breaking out in all currencies because that's where you get the real momentum from. So I realized that what I have on my screen here is the Dow Equity Futures contract, and I have this on a 5-hour time frame. So the question was, you know, why don't you just go take a look at the daily or the monthly time frame for the Dow? I believe this one that I pull up here will be for the monthly time frame for the Dow. Ah, voila, it is. And so here you can really see it clearly. Now, the reason that we take a look at this, you know, there's lots of people out there, maybe even yourself, you know, that are wondering, you know, are the markets like, are they topping? Are we just approaching a big, huge bear market and all that kind of stuff that is out there? A lot of fear. And I don't want you to have fear. Instead, really what I want you to do is, you know, utilize your signals, my signals, combine them, find some type of way that you can make a good call, a very good call about what the market is doing and the reasons why. You don't have to use my exact same tools, but most of these. But hey, look, these tools. You know, if these are the exact tools that led me to that #1 spot by Timer Digest, which is basically taking a look at the nation's top market timers out there and comparing each of us to each other. And it is all about competition. Come on, you know, I mean, you know, it's not me bogusing, you know, stuff and giving you in any event out here. Why is currency so important? Because this is the internet, folks. And you don't really think that there's somebody sitting over in London right now, or in Paris, or in somewhere over in Germany, or you know wherever they might be, maybe in Luxembourg, wherever they might be, you know, or over in Osaka, or maybe Hokkaido, or wherever that might be, and you think that they're just limited to only instruments in their local marketplace. I mean, you're not. I got 100 different ETFs, and how many ever mutual funds that allow you to go ahead and invest in emerging markets or Italy or France or wherever it is that you want. And what you really want to know is how are those instruments going to give you a return in your currency, right? Even though somebody else is trading them in their currency. So we take a look at the Dow. Now, typical behavior when the markets top is they'll top in all currencies at the same time, oftentimes right to the day. Here we take a look at the Dow. And when they don't, in fact, when they start to break out, there was the big question, hey, why back after the previous election back in November, and markets kept going up and so forth, and all this consternation back and forth, all this noise and just basic, garbage. I was going to say something else, but I'm just holding. I don't want to get us in a lawsuit by the FCC. But I'll use the word garbage out there. And the reality is the reason why our markets were moving higher is because confidence around the globe had confidence. Traders around the globe had confidence. I say confidence around the globe because this is where there was confidence in the market. There was elsewhere, but it certainly was in the U.S. stock market. And you measure that by what's going on their screen too. So what we can see here, get to the point already, Steve-O. The Dow priced in euros and in pound sterling is at new all-time highs. That is not the case with regard to the Dow priced in dollars. But what that means to us is because the Dow does not top out first in euros and pounds. You kind of get that picture out there? It just doesn't do that. And since we've made a new all-time high in euros and pounds, the deduction is, Sherlock, Watson, that the Dow in U.S. dollars is eventually going to make a new all-time high. The January 26th top was just a top that began and formed this consolidation between the 26,000 level and 23,000 level. I'm just kind of rounding just to make it easier. Hey, price in yen, we're not there yet. We're likely going to get there, which is about 2.9 million yen, give or take. For each, in essence, share of the Dow. If you're going to buy the Dow, you're not going to do that. You're going to buy the Dow Diamonds. Maybe you're going to buy the YM. There's how many different vehicles out there that, in essence, represent the Dow 30. Just a plethora of them, if I can use that word, plethora. I don't even know if I'm using it properly, but I went ahead and used it because it sounds pretty cool. So you've got and now when the Dow, what's really more important is that when the Dow is breaking out on other screens out there, in other words, worldwide currencies, it is a huge vote of confidence because the Dow is kind of the big game animal out there. So you've got the Dow that's breaking. If you take a look at the S&P 500 out here, I probably have it as the Wilshire, but you can't trade the Wilshire. But maybe I do, maybe I don't. But if we do take a look at the indices, that being the S&P 500, and I take a look at that, I believe this will this do it? Monthly S&P? This should do it right here. So this should be the chart. Excuse me. Oh, there's a voice change there. Here's the S&P 500 priced in a monthly chart, priced in dollars, euros, yen, by the way, and in a Great British pound, right? So we take a look at this right now. You can see we are at new all-time highs, truly. Now, okay, give or take a couple of bucks. But basically, as we speak right now, in the month of August, which is what we're in, we are at new all-time highs. So if you're asking a question, just like I asked the question too, I tried a short position on Thursday, I believe that it was. And when I woke up on Friday, I said, well, you know what? That seemed like a pretty silly thing to do. And subscribers, I said, hey, look, let's keep the losses small. If the price closes above these two levels, it says we should not be in this short position. And if we take a look at what's going on with regard to the S&P 500, and remember we looked at high-grade bonds? So that was one measure of liquidity. Remember we take a look at the spot volatility index trading below the 50-day exponential moving average, another method of liquidity. If you think the only measure of liquidity is how many shares have traded inside the DIA, the SPY, the QQQ, the IWM, it blows my mind. You can't do that, because you're not really taking into account what's the momentum like across the globe, what's going on in the world out here. And so now what we know is that the S&P 500 do all-time highs in every major currency. Do you really think, let me put you in this position here, other than if you knew that you had a some type of signal that truly was able to give you like right to the tick, the actual top that began in both and all bear markets out there. By the way, I do have the signal that was present before the beginning of every single bear market for the last 130 years out there, and not something that anybody else that I know has other than subscribers, and they know what that pattern is, and I taught that to them and so forth. But it has been present before every major bear market, and we don't have that signal, by the way, inside the Dow right now. But here, what we can see, and they probably went off track, is just simply, do you really think that somebody that's trading, this is the S&P, I said Dow diamonds, but the same thing, SPYs. You really think that the individual trading the SPYs in euros right now is ready to sell their position? If you look at this, 2,465 euros for one share of, in essence, the S&P, so it's probably 246, basically, about 10% inside their currency. You think they're sellers? If they're breakout and momentum traders, how about the Stevie son in Tokyo or Hokkaido? Folks, third gauge of liquidity. Markets, the S&P breaking out in all major currencies. You ready? My dad, may he rest in peace, always had great advice, such as, if you want more, you have to become more. It's been a guiding light that has driven me to always be the best that I can be. When it came to trading and investing, I wanted more, and so I developed a set of disciplined tools that led me to become the #1 market timer for the S&P 500, according to Timer Digest. Dad went on to say, if you want more, you have to give more, which is why I took those same disciplined tools and created a black box that could look at any instrument for any time frame and tell subscribers and I whether it was bullish, bearish, where support or resistance was, and whether an instrument was forming a top or a bottom. The scans from my black box are now a part of the Mastering Probability service, which allows me to give more to subscribers. This coming Tuesday, August 7th, from 5 to 6 p.m., I'm holding an open house at TFNN.com, and I'd like to invite you to see the power of my black box. When it comes to trading and investing, I know I can help you become more too. Just go to the homepage of TFNN.com to sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Back, folks. So the question inside the Tiger's Den was, what percentage of U.S. stocks are owned overseas? And I don't know the exact percentage. I've done some reading up on it at one point in time, and I've seen guys throw out different percentage figures, nothing that I could really vouch for. Here's what I know. If you take a look at the Swiss National Bank as one example, I think it's around 10 to 15% of their portfolio. Maybe it's more than that. Maybe it's like 90 billion. I mean, there's small fish out there at 800 billion. I think something in that range with regard to their investments. So big player in the U.S. market. It was many years ago. I don't recall the exact year. This is 2018. I'm going to guess it was 2014 or 2015 when the Bank of Japan decided to free up and say, okay, our retirement assets can be invested around the globe. Okay, that included the U.S. out here. And so I can guarantee you that there are traders around the world that our cash has to go somewhere. And it's been like this forever. Forever. I mean, forever. You know, and you've got to just figure out where's the money going. The idea that follow the money came from Tricky Dick Nixon out there, you know, and Bernstein and the other guy, bull, loney. Okay, following the money is probably the biggest, and it's not even a secret. We all kind of know it. If you just can figure out where the money is flowing, the easiest way to do that is figure out what the return, where are people seeing assets break out on their screen. Is it gold? Is it silver? Is it oil? Is it some commodity out there? And it can be multiple things, by the way. Is it U.S. equities? Is it equities in Russia? Is it China? You know, where is it? And as soon as you can start to see that shift, then all you have to do is really follow the money, because then you have momentum all over the board. Last question was, is TROX, T-R-O-X, is this a low-risk entry out here? And at this stage of the game, I don't know the answer to that. I don't see it just yet. I see price pulling back to a level of support out here. Let's put TROX real quickly. I know the show is almost over. Let me put the 3 time frames up here for whoever asked. TROX is the ticker symbol. And price is trading below the daily, the weekly, and the monthly TAS market profile. So I'm going to say at this stage here, 156, the answer is no. Hey, folks, thanks so much for joining me. Stay tuned, or stay tuned. Your favorite polar bear, David White, he's up next. Hey, don't forget, sign up for my open house tomorrow. We'll see you then.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter what kind of trader you are, 2018 is a great time to try out a subscription